And then, of course, the most important thing is location. Are we at a supply or are we at a demand zone? And the next question, how far back do I look to see if a level's fresh? I just look back to see if prices traded through that area before. So right here is my area that I'm noting as my demand. I look back, I see price traded right through that before. I don't have to keep looking back. Okay? And in addition to this level, there's another level just slightly below that as well. So looking at this, there we go. Got two levels of potential demand. And let me go ahead and refresh my chart here. Oh, I thought I had my labels in here. I guess I don't. Let me put those in. There we go. So we're looking at about 79.57 down to 45 for the first level, and then 79.23. Let's move these around a little bit so we can see them better. There we go. All right. So those are the two levels there, 23 down to 78.91. So that's what I'm looking at for the U.S. dollar, although it is going to take a while to get there because we are seeing some weakness right now in the trend. We could get a bit of a correction, but possible continuation down. There's no really strong demand that should halt us from continuing to move to those targets I just mentioned. Okay. Let's see, 81.35 considered a good demand zone on the 4-hour chart. Let's take a look. Yeah, why do I like the retest? Well, what I'm looking for is where the institutional trading came in. Where's the strongest area of supply or demand? And when I look for the strongest area, once we return to that area, if we leave, just think about this. Okay, you're asking right now about 81.35. I'm not seeing anything at 81.35 as far as on the 4-hour chart. Let me go back a little bit further in time, but there's nothing there that I'm seeing. It looks different on my chart. This is the dollar index that I have. Mine's delayed a little bit, but it should still be the same by looking back at history. Anyway, what I wanted to see was if this area is fresh. But if you think about it, the reason why I'm looking for a retest, I don't know this breakout's going to happen. We were moving down, 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 and then all of a sudden we get this breakout right here. TradingView.com. Okay, using a different one. All right. Anyway, when we break out like this, we don't know that's going to happen. Okay, but what we do know is that it all of a sudden showed price showed that there was no more no more supply to push prices down, but a huge amount of demand. There was an imbalance here, and because we left the area very quickly, that shows that there's likely to be a lot of leftover orders. People who couldn't buy there because they couldn't get their orders filled because it moved away too quickly, or people who saw that it left the area quickly and want to buy once it gets back there again. So that's why I like the retests. Now, if we come back down to that area, there's likely to be some leftover orders. Now, the only thing I don't like about this area right here, that's just under 81, is the fact that it based there for quite a bit of time. Remember, I want leftover orders. I don't want to have an area where there was a lot of chance for people to get into the price, to get into a trade at a particular level. So when I'm looking at the dollar, actually, I'm not sure if I have the dollar futures on this account. Yeah, I do. I have dollar futures, but it's delayed. So I can actually look at the futures here, which is a tradable security. And looking at that, there is an area right here at about 81.50 that could qualify as an area of demand. So that may be what you're seeing. I'm not seeing it on my other chart, but on this 4-hour chart for the futures, right there. Okay, that looks a little bit better. We do have that area right around 81.50. As a matter of fact, let me get the exact numbers for you. Okay. Yeah, that's the one you were mentioning. That's what I thought. Okay. Yeah, that looks decent. You can see that we don't have any topping tails on the candles leaving. We leave pretty good compared to the size, the basing to the left. You're talking about all this underneath. Yeah, the longer base right here, the weaker that area becomes. But this is fine. Now, what you're asking about is the basing right here before we reach the level. That does make me worried. Absolutely. When I go into a zone, I want to go into a zone very quickly. And the fact that this is basing before it reaches the zone makes me less likely to want to take a trade there. Okay. That combined with the fact that we are in a very strong downtrend, you can see that my RSI, which I have below, I use 60/40 on my RSI as my indicator rather than using the traditional 70/30. And going back to my articles, if I type in 60/40, you'll see I have an article that describes the reason why I do this. Let me go ahead and copy that link as well. There we are. And the reason why I do this is because in a strong bearish trend, you don't go above 60 on all the retracements, and that tells you the trend is likely to continue. Okay, in a strong bullish trend, the RSI tends not to go below 40 on the pullbacks. Notice all these pullbacks right here, it doesn't go below 40, so that tells you the trend is likely to continue as well. Well, this is suggesting that the trend is still very strong to the downside. We're not seeing any weakness other than the mixed color and pauses on the way down. So that's not telling me this is going to be a very high quality opportunity. If anything, it might be a counter trend opportunity just for a small bounce. And then we're likely to continue down to those other areas I mentioned on the daily chart. But yeah, I don't like this area as much either, down around, what is this, 80, 60, 80, 80. Okay, right around the 80-80 area because we based for too long. I want to see that we didn't stick around there long and we left very, very quickly for levels. So taking a look at a couple pairs, we can go ahead and take a look at the euro dollar. Since we're seeing weakness in the dollar, it's not surprising to see strength coming in right now in the euro. And I'll start off on the bigger picture here and work my way down. These are some old levels that I had there. You can see that this level worked pretty well as an area of supply. We're still marching up towards that area. Don't know if we're going to be able to stop there. And you can see right here, if I draw in this area from the origin of supply, like I said before, I want to see leftover orders that are going to help push price in a particular direction. Well, we dropped, based, and we left that area very quickly with lots of selling pressure. We ended up using some of that selling pressure on this return. The second time up to that area is not as high quality because we're not going to see as many leftover orders. People were already able to trade. They were already able to trade in that area. Okay. Anyway, so if that's not the level that we're likely to stop at or pause at, I look back and I see that there is another area right here. We had a small rally-based drop, but that really was a test of this. We've got drop-based drop. Okay, so all these areas have been tested quite a bit, and with the dollar not having a very strong demand zone, we may actually see the euro continue to move to the upside for some time. We've been stuck in a range for a little bit. That range may be resolved now with a move to the upside if we can break above this 136. Looking above 136, the only fresh demand zone I see may be all the way up to 141, almost to 142. Let me go ahead and refresh and get the numbers there. Remember, I'm always scanning back and looking to see fresh areas. Now, there was a little pause right here, but it had already been tested once. So really, 141.48 to 42.45, that's a rally-based drop area of supply that may offer the key for the next reversal. So we may be seeing a move back up in that direction.